Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Jim Cramer. Today we're going to be doing another Cramer versus Cramer where I go through several lightning round stocks from Jim Cramer's Mad Money. I'll have a link down in the description to the show where you can watch the videos yourself. I'm recording this May 23rd, 2025, and these are coming from just a couple days ago on the 21st and 22nd. Looks like I'm going to go through about 9 stocks. So the way this works is I watch the videos, I see what Jim thought, and then I share what I think about the stocks and sometimes Jim's commentary. All right, so first stock. As always, this is not individual investing advice, just how I analyze stocks, and I'm really just giving my quick take on these. All right, ConocoPhillips was the first one. Jim says no, mostly for macro reasons. He thinks oil could go lower. Totally agree. All oil stocks basically are kind of in a wait and see mode. It looks like Trump probably convinced Saudi Arabia to pump more oil. They seem to have a good relationship going on. That's going to hurt all the other oil companies. And if they drill, that just makes things worse. So I don't think they should be drilling whether they have permits and can drill in national forests and everything else. Why would you do it if you're not going to make any money, right? So right now, we're not at a cyclical bottom yet, I don't think, for these stocks. Oil probably needs to get into the 40s before we see prices that start to look attractive on most of them. All right, ticker number 2. This is going to be Medical Properties Trust. So somebody asked about whether he should buy this for his girlfriend, or maybe he gave a shout out to his girlfriend or something. But I have a video on this if you search my channel for the ticker or the name. Jim thought, no, too risky. I totally agree. I wouldn't touch this with like anybody else's money, much less my money. And I've written about this one before. I've written articles, I made videos. Really good lesson here, not to chase dividends and yield. So this is the kind of problem that you can get into, right? I won't pick the very top, but you buy up there and you're down 80%. If there's a first sign of any kind of accounting problems or management looks like they're not very trustworthy, anything like that, you sell, don't look back. There's plenty of other stocks in the world. All right, next one. I get a lot of questions about this one, and I probably have, if I don't have a video on the public channel, I have one over on Patreon for new holdings. Let's see. Jim said yes for the long term, basically. He thought the near term, if there's a recession, that the stock could sell off quite a bit. It's hard to see the price here. Let's get rid of this. So it is showing some weakness here. And so these guys are a bank, like, and with any kind of financial institution, kind of on the same wavelength as Jim here, as if there's like a recession, he was mostly referring to the stock price going down. But being a relatively new bank with not a lot of historical information and just financial company in general, I'm really cautious with those. I want to see how they do in a recession before I consider buying them. So this looks like a pretty good business to me, but you never know what kind of risk these companies are taking until they get stressed. And I want to see at least one stressful period, basically, that they can navigate through. Otherwise, you can lose a lot of money potentially in kind of any kind of financial company, or most of them anyway. Okay, next one was MRVL. I have video on this one too. So Jim was saying yes for this one. He thought the price was pretty good. It definitely is in a drawdown period here, and we are seeing some signs that it's coming off the bottom. But in the video, I talk about how it could fall like 70% if it falls similarly to how it has done in the past, and it's only down 50%. So I think it's obviously a better price now. This might end up being an okay spot to buy it, but I would rather buy at a deeper discount from the previous peak. Plus, this is a pretty high peak. I mean, let's just look and see what I did in 2022. So with no recession and it fell 60% off its high. So you have to imagine if we had some kind of recession that it could fall even deeper than that. So that's just the simplest way to kind of look at it. So I think it's more interesting here, but not cheap enough for me yet, because it's a long, if a stock falls 50% and then eventually falls 75% off its high, you're down 50%. You're not down 25%. Okay, Lucid Group was the next one. Jim says no, he likes Rivian better. I don't really like either one of them. It's just too risky. So I like the Rivian trucks. I think they're cool. So if I had a lot of money, I might buy one, but the stock is just too risky for me. So it's not pulling up any data for Pony AI, which was the next one. Okay, but so I'm going to say no. But Jim says it's a young person's stock. He was trying to figure out how old the person was that was asking. I do have a comment on this. It doesn't matter how old you are. This is one of my biggest pet peeves about common, especially like 20 years ago. Well, I'll tell you when it started. It started in the 90s during like a dot-com bubble, where they would say, well, if you're young, you have plenty of time to recover from all your losses, right? That might be kind of true for an index. I mean, if you bought NASDAQ QQQ at the top, 17 years later, if you would have been okay, I guess, because you weren't pulling money out. But for me, when it comes to individual stocks, a good stock for somebody 85 years old is also a good stock for somebody who is 18 years old. Unless you think you have less than 5 years left or something like that. And even if you do, you usually can't predict with a high degree of certainty what a stock's going to do within 2 or 3 years. So, if you're Warren Buffett and you're 80 years old and you buy a stock and you're still around 14 years later, I mean, that has plenty of time for its potential to play out. Usually 5 years is enough for the stock price to reflect the value in the business if the stock market gets it wrong for a little while. So, it doesn't matter how old you are. If Pony's too risky for an 80-year-old, it's too risky for an 18-year-old. Okay. PAAS. I forgot the name of this one. Pan American Silver. I think gold, silver, precious metals are interesting as a diversification for emergency cash, especially if interest rates get lowered, but not so much for an investment. Jim said it was good. I totally disagree. I mean, well, let's just go long term, right? You can see mining companies are just really hard to make money in. Basically, no return for 20 years. Inflation, once you adjust for inflation. So, but if you would have owned silver, I actually do have silver. I bought, and maybe ironically, like in 2005. I can't believe I've had all these coins for that long. I think that they're up 200, maybe 250%, something like that, which sounds like a lot. It's not really, but as a form of like emergency cash, in zero rate interest rate environment, it might be okay. So that's the way I would go with precious metals. I'm always tempted by platinum, and I've owned it before, but it's just been really hard to make money in it. So if I was going to buy a precious metal right now, it'd be platinum. Okay. Docs. Okay, so Jim says, let's see, what does he say? No, they had a bad earnings call or some point. I'm not sure when it was. Maybe it was just recently. It's down about 35% off its high. So my issue here is this is all the earnings history we have. For a stock with this little of earnings history, I want more growth. And the revenue growth and things like that were just a little too slow for a growth business. So it kind of falls in the middle where, like, what's the PE? It's a 36 PE. They have to be growing faster. If we just look at the earnings, they're supposed to be flat this year. Has to grow faster than that to have that high of a valuation. So, I mean, really, yeah, I mean, you need to get a PE down below 20 probably before this becomes interesting. And then it's not very interesting anymore, probably, if that happens, because there's not much growth. So if growth improved, maybe, but not right now. And so I agree with Jim on that one. Okay, last one, Micron. So Micron was a buy on this channel. We bought it in the Cyclical Investors Club on Seeking Alpha. It was a weekly pick over on Patreon, which I have weekly picks on Patreon for $25 a month. They've been doing really well. Micron was one of those. It's up over around 30%, I think, on average from those purchases. I've done really well with Micron in the past. I've kind of become a Micron expert, stock expert, I guess. So, because I was able to buy it here, get a double, and then buy it again here near the bottom, and we're up 30%. So, you want to kind of layer into this one when it's really cheap. I don't know if it's, let's see if it's at the first buy price, because I have a couple of them. Yeah, you want to buy this no higher than when it's 50% off the high, is what I would say. And then start layering in at that point down. I was able to buy 2 tranches during this decline right here. And then you want to wait. So here's the thing. Jim basically trying to time this. He thinks it's toppy, short term, maybe. But my strategy is this. You wait for the deep drawdowns. You buy them when they're very cheap. Then you don't worry about the short term. I don't think about it until it's doubled or more. And that's when I would consider taking profits. So you don't have to spend all your time trying to guess what this is going to do on a daily basis. It can go, I mean, if you look back here, when I bought it here, it went up, it went down, it went up, it went down. I mean, you're trying to pick all this, or you can just hold it until it's up 100% and then take your profits. So it's much easier to do that than it is to try to trade the short term. And it's also, if you're good at it, it's more lucrative than holding for the long term because of these big drawdowns that we get. Like if you held it up here, where are you at? You've made no money. Even if you had, let's just see what this is. This is 2018. So let's say you bought and held, you're only getting a 6% return per year. I think I've made over 200 or maybe 300% now just on this stock from trading it over the medium term. So that would be my approach. Watch the videos on the channel. Just go search for them. I also have articles. I have like 10 articles on Seeking Alpha on Micron since 2018. So I've been covering this one for a long time. Okay, that's it. Thanks for watching. You saw me using Fast Graphs here. I do have a 25% off affiliate link down in the description if you want to try it out. It's really useful for getting that initial read on stocks, whether it's even worth your time to dig in deeper. Most of the time it's not. So you can go through and kind of say, okay, that's not for me. That's not what I'm looking for. You know what you want, and then go and see if it is what you were looking for. Thanks for watching. Have a good holiday weekend here in the US. I'll be back on Monday or Tuesday. And I'll see everybody later.